So last week, Sibanye announced that they were launching $500 million of senior unsecured guaranteed convertible bonds due in 2028. The convertible bonds allow the bondholders the option of converting the bond into a specific number of ordinary shares. And the option of conversion is attractive to bondholders, so they are willing to accept a lower coupon. It's also a senior bond that's guaranteed, so this whole launch is a way for Sibanye to raise capital in a way that's cheaper than would have otherwise been possible if they had decided to go with plain vanilla bonds. The shares traded about 20% low on the announcement, and among other things, possible reasons for that include the dilution effect, shorting shares to buy the bonds, and shorting Sibanye to lower the conversion price, because the conversion price was set on the VWAP on the day of the announcement. So the conversion is at a palatable price. It's set in US dollars at about $1.33, $1.34, and that's about 24 Rand 58 at an exchange rate of 18.39. So the conversion is likely to take place above $1.34, but it could be much higher than that if the Rand weakens further. The price of Sibanye is approaching a drawdown that's similar to levels we saw in 2018. At the moment, it's about 70% down. In 2018, it got close to 80%. So that potentially makes the outlook a little bit asymmetric to the upside. The risk around China remains, which could impact commodity prices, and Sibanye won't be immune to that. But this is a proactive move by management, and it limits the risk somewhat. We've lowered the intrinsic value from 32 Rand to 25 Rand, but our recommendation remains a buy. But the main reason for cutting the intrinsic value is simply due to the dilution effect. We're assuming that there will be full conversion. It's important to know that the dilution impact on the shares is about 12%. But the greater the growth of Sibanye from this point onwards, the less the dilution impact in terms of value. And then what are they using the proceeds for? They're using some of it to fund the Roldan acquisition, which was announced early in the month. And then also just to preserve the balance sheet going into this lower commodity price environment. So it could turn out to be a smart move by Sibanye to secure financing in this way. And then relative to other commodities, we still like PGMs and we also like Sibanye. So our recommendation remains unchanged.
Thank you very much for joining us today.